Bitcoin has surged to a staggering new record high of over $123,000, igniting excitement throughout the cryptocurrency world. This remarkable rise comes as the U.S. Congress begins its crucial Crypto Week. Here's a detailed breakdown of today's monumental event. Looking ahead, the trajectory of Bitcoin and the broader cryptocurrency market will hinge on several key factors. Recently, Bitcoin experienced a significant price surge, reaching levels not seen since early 2021. This rally has been largely driven by growing institutional interest and the surge in demand for Bitcoin exchange-traded funds, ETFs. Institutional investors, including hedge funds and corporations, have increasingly recognized Bitcoin as a hedge against inflation and currency devaluation. Should ETF demand remain robust and positive regulatory developments continue, Bitcoin could test even higher levels in the coming weeks. Analysts suggest that the market may experience sustained upward momentum rather than immediate consolidation, as more investors seek exposure to this digital asset. However, there are inherent risks. A sharp price increase often triggers profit-taking, which could lead to increased volatility in the market. This volatility is compounded by the uncertainty surrounding regulatory discussions, particularly during the upcoming Crypto Week, where lawmakers will debate the framework for digital asset regulation. The backdrop of this volatility is a rapidly evolving regulatory landscape. Governments worldwide are grappling with how to regulate cryptocurrencies effectively, and the outcomes of these discussions could shape the future of digital assets significantly. Investors should closely monitor ETF flow data and Bitcoin's ability to maintain its breakout level above $123,000. The implications of these developments extend beyond individual investors. They could influence the entire financial sector by altering the perception of cryptocurrencies as legitimate investment vehicles. The upcoming days will be critical as we await concrete outcomes from the legislative discussions. Will Bitcoin continue its upward trend, or will profit-taking and regulatory debates cause a retreat? As the market evolves, stakeholders must remain vigilant and adaptable to the changing landscape of cryptocurrency regulation and market dynamics, particularly as institutional participation grows. The journey to Bitcoin's record high is rooted in a combination of recent market dynamics and evolving regulatory landscapes. In the weeks leading up to today, Bitcoin and the broader crypto market saw a resurgence in interest, driven by substantial ETF inflows and improving risk sentiment among investors. This renewed enthusiasm can be traced back to major financial institutions embracing cryptocurrency, signaling a shift in traditional finance's perspective on digital assets. The anticipation of Crypto Week in Washington, where lawmakers would debate significant legislation impacting the crypto industry, further fueled optimism among traders and investors alike. Historical context reveals that previous surges often faced hurdles due to regulatory uncertainties. However, the current climate suggests a shift towards more constructive discussions, with lawmakers increasingly recognizing the potential benefits of a regulated crypto market. The recent rally can be traced back to positive coverage by major financial news outlets, including a report from CNBC highlighting Bitcoin's brief rise to $122,800 before surpassing the $123,000 mark. This surge reflects not only investor confidence, but also the growing acceptance of cryptocurrency as a legitimate asset class. As institutional interest continues to grow, it is clear that Bitcoin is no longer viewed as a speculative investment, but rather as a viable component of diversified portfolios. Looking ahead, if regulatory frameworks continue to evolve positively, we may witness further institutional adoption and innovation within the crypto space. The convergence of bullish market sentiment and legislative progress could pave the way for Bitcoin to potentially reach new heights, transforming the landscape of digital finance. As stakeholders in the crypto ecosystem prepare for the outcomes of upcoming legislation, the future of cryptocurrency appears poised for unprecedented growth and integration into mainstream finance. Bitcoin has reached a new all-time high, a development that carries profound implications for the cryptocurrency landscape. This surge indicates a robust institutional demand, with large investors increasingly absorbing the available supply of Bitcoin. Such demand is critical for crypto investors, as it suggests not only the potential for further price increases, but also a broader acceptance of digital currencies. Historically, Bitcoin has often been viewed with skepticism, but this latest price milestone reflects a significant shift in sentiment. The rise of Bitcoin is pivotal in establishing cryptocurrencies as a legitimate asset class, especially as lawmakers currently engage in discussions aimed at creating clearer regulatory frameworks for the industry. The growing institutional interest in Bitcoin is underscored by major financial players, including hedge funds and publicly traded companies, adding Bitcoin to their portfolios. This trend highlights Bitcoin's emerging status as a hedge against inflation and economic uncertainty, particularly in light of global monetary policies that have led to increased liquidity. Furthermore, the increasing number of financial products tied to Bitcoin, such as exchange-traded funds, ETFs, directly appeal to traditional investors, creating a bridge between conventional finance and the crypto world. The immediate consequences of Bitcoin's ascent are already evident. The market capitalization of the entire cryptocurrency ecosystem has surged, with many altcoins experiencing substantial gains alongside Bitcoin's rise. For the average person, this development is crucial. It signals that cryptocurrencies may soon operate under more predictable regulatory conditions. Enhanced regulations can bolster investor confidence, potentially leading to greater mainstream adoption of cryptocurrencies as a viable investment option. Moreover, this price action reflects a broader change in risk appetite among investors. As regulatory frameworks evolve, more individuals and institutions appear willing to navigate the complexities of the crypto space. Looking ahead, the outlook for Bitcoin and the broader cryptocurrency market appears promising. As discussions around regulation continue, the potential for a more structured environment may open the floodgates for institutional and retail investment alike. With increasing legitimacy, Bitcoin could solidify its role as a cornerstone of modern finance, driving innovation and adoption in the years to come. The next few months will be crucial in determining whether this momentum can be sustained and translated into lasting change. On June 12, 2026, Bitcoin achieved a historic milestone, soaring past $123,000 for the first time ever. This price surge was noted at approximately 10:30 a.m. Eastern Time, as strong institutional demand fueled by significant inflows into exchange-traded funds, or ETFs, drove the market upward. This breakout occurred amidst a favorable regulatory climate, coinciding with the onset of Crypto Week in Washington, where lawmakers began discussing pivotal cryptocurrency regulations. Notably, Bitcoin briefly touched $122,800 earlier in the day, setting the stage for this remarkable rally. The news sent ripples through the broader cryptocurrency market, with altcoins also experiencing notable gains. This significant price movement marks a distinct shift from previous surges, as it is not only driven by retail interest, but also by institutional involvement, indicating a growing acceptance of cryptocurrencies as a mainstream asset class. The context surrounding this surge is critical. Over the past year, Bitcoin has seen a steady increase in adoption by major financial institutions, with several banks and investment firms launching cryptocurrency trading desks. Additionally, the approval of Bitcoin ETFs has provided a regulated avenue for investors to gain exposure to the asset. This regulatory acceptance has not only bolstered investor confidence, but has also attracted a wider range of participants, including pension funds and family offices. The impact of Bitcoin's surge on the cryptocurrency market is profound. The price increase has reinvigorated investor enthusiasm and has led to a broader rally in altcoins, with Ethereum and other cryptocurrencies also experiencing significant gains. This shift indicates a potential turning point in the perception of cryptocurrencies, moving from speculative assets to recognized investment vehicles. Looking ahead, analysts suggest that the momentum could continue as regulatory frameworks become clearer and institutional adoption grows. The discussions taking place during Crypto Week could lead to concrete policies that further legitimize the cryptocurrency space. As Bitcoin solidifies its position, market participants are optimistic that this upward trajectory may pave the way for even higher valuations in the coming months. With increasing institutional interest and a more structured regulatory environment, Bitcoin's journey appears poised for continued growth, potentially reshaping the financial landscape in the years to come. As we explore the future of Bitcoin, what do you think will happen next? Will it continue to rise, or will we see a pullback? Share your predictions in the comments and subscribe for daily deep dives into the world of cryptocurrency.